Nike actually posting its worst day since 2002 after its earnings report last night. Last week, the Chartmaster predicted the stock would see a, quote, real plunge, a crash of sorts. Wow, wasn't that prescient? So where does he see the stock headed now? Let's bring in Carter Worth of Worth Charting. Now what, Carter?
I don't really know. I mean, one thing we know, before we look at the charts, if you think about it, before today, Puma and Adidas were both down 52% and Nike was down 42%. They're a highly correlated series of stocks. Nike was just holding out, and then now, of course, the floor has fallen out. Tough to press a short here, and yet at the same time, buying it. Why? Just because it's down? Let's look at a few charts. You can draw the lines this way. You see that descending wedge, doesn't matter what you call it, a descending triangle, and then drops in gaps out through the bottom, just like FedEx did and so many others. Look at a longer term chart of that same sort of setup. And you can see it there on the screen. We've pierced through the lower band of that formation. If we pull it back a little further, draw another line, you can see this has been all very sort of symmetrical. On the way up, the stock fails up against trend on the way down. And now where can it go? Let's keep going a little bit longer term. The real issue is this. This is the channel, the trend line that's been in effect since the 09 low. And we breached it today. And in fact, I've got a chart since the stock's IPO going back to December of 1980, and we breached that trend line as well. There's just no reason to step in here and buy it. It's what a classic, not to say it's cheap, but the thinking that it is cheap is a trap.
A value trap. Carter, wow. We'll see you shortly on options action. Jeff Mills, do you think Nike's you just said you would think it's interesting. Change your mind?
Well, yeah, I said I think that there's probably more downside to go, but if it gets below, that $80, I think you at least have to start buying, right? We don't know where the exact bottom is going to be. I'm describing this difficult environment relative to employment and spending, so there are headwinds there, but this is a stock that's now down a lot versus, say, a Dick's Sporting Goods, for example, where the chart actually still looks pretty good, but I have a hard time that stocks like that or, even a stock like Apple, I keep talking about this, they're going to be able to levitate in the face of all of this. So you have a stock like Nike, which has already been beaten up. Of course, there could be more downside. Like I said, I think there probably will be, but those are names that you should be looking at versus some of these stocks that maybe have more downside to go. So that's I think the challenge that investors are dealing with right now. But again, focus on those names that are down a lot, and I think that's probably where the opportunities are.
Grasso, you like the charts and you like to make bold calls. So I ask you this. Will Nike see its pandemic lows? About 68 or so?
So the pandemic low, yeah, you're right. That's the ballpark. It's actually trading around the 50% between the February 2020 and the pandemic lows. And if you look for support, you go back to 2019, right around Jeff's $80 mark, and that's where you get some support there. So I think that you're okay to nibble. And we describe nibble as, first of all, 3-day rules, yes. Nibble, a quarter position. But I'm going to throw you, I think you're okay to nibble in Nike, but I'm going to throw you in a would you rather and throw in Dick's in there because Jeff mentioned it. Dick's is up 34% in 3 months. It has momentum. Would you rather? DKS.
Are you answering your own would you rather with DKS, or are you asking the panel would you rather? Because last I checked, I do the questioning, so I'm not really clear on who this question is directed to. So who would you like to ask, Steve Grasso?
I'll go with Tim for 500, please.
All right, Mr. Seymour, you heard Mr. Grassley. He's asking you a question. Please answer.
Well, would I rather?
Well, you're in Nike, so you'd rather Nike.
I mean, I have to. Carter scared the heck out of me when going back to the IPO chart and having breached that. But I like that April and even that September of 2019 level that I think is very important. I think some of those intraday draft, down day drafts on the low of COVID are things that we are looking at. But ultimately, I think the real test for this company is an environment where rates were a little bit higher in a place where the consumer had less of a job. Those are counteracting each other. I think it's pretty positive.